Hello and welcome everyone to the week ahead commodity report for the 9th to the 13th of July 2018, presented by myself, Phil Carr, at the Gold and Silver Club. First off, on Friday, we had non-farm payrolls. And although the headline number was positive, we did see the US dollar break down later on in the session. And that has been due to wage growth rising less than forecast, and also the unemployment rate increased as well. So both of these have been negative factors for the US dollar. And as a result, we have seen the US dollar slowly break down over the course of the US session on Friday. It's now broken down to 3-week lows. And we've seen some support here come in, certainly for gold and also silver as well. Silver continues to trade around $16 per ounce, and gold is holding up around 1,254 to 55 US dollars. So we'll have a look at that very shortly on the charts. There are some seasonal factors that you should be aware of as we progress throughout July. So if we go back to the trend cycles that we've mentioned before, it's very common to see gold prices bottom out over the month of July. That is also the same for silver prices, and we can look at the correlations there with platinum and palladium too, which got some support as well on Friday. So from a seasonal point of view, over the last 30 years, 15 years and 5 years, typically we do see the low come into the metals over the month of July, and the strongest quarter for gold prices does tend to be the third quarter here. So over July, August and September, this is usually where we get this strong rally in the metals. And of course, where we're poised at the moment now, with the dollar breaking down to 3-week lows as we go into next week and gold and silver getting supported, we could be at a bit of a turning point. We'll have a look also at the Reuters Commodity Index. So this is the Reuters Commodity Index, and you can see on Friday where we have essentially turned back up again, and we're retesting the neckline. So this goes all the way back to June of 2017, and note again where typically we do tend to see commodities bottom out over June and July, and then we had this strong run up over 2017, and in fact we're retesting the lower end of that trend channel at the moment, and you can see where prices are starting to turn up within the overall commodity index. So we're starting to get a bid here, and we're seeing quite a few commodities potentially start to base out. This overall sentiment and momentum on commodities could increase to the upside if the dollar corrects further as we continue to go throughout July. It's been noteworthy as well that Goldman Sachs put out a statement on Wednesday maintaining the bullish view on commodities, stating that the current weakness in the commodities complex is a buying opportunity. You can see that very clearly going back to the commodity index, where we're starting to get a bid here on the commodities complex as we go into next week here. We're starting to see a turn here in commodity prices, and certainly we'll have a look at that on the charts very shortly with the metals and also with the energies too. Moving over to the charts, firstly, let's have a look at platinum. Platinum into the close on Friday, trading at 847 US dollars per ounce. Platinum capitulated earlier in the week after it retested 800 US dollars per ounce. In fact, if we have a look at platinum here and go out to the 20-year chart, you will see again here where the 800 level has been really critical as a major level of support going back to 2014, 2009, 2016, and of course more recently in 2018 as well. And we're now bouncing right off that $800 level, which could potentially set up for a really great buying opportunity and certainly longer term core position as well if we do see this follow through move to the upside. So certainly platinum should be on your watch list at these levels. We do in fact have a buy signal on platinum at the moment. We'll get a little bit more confirmation as we go into next week if we were to see a break back above the weekly highs. In fact, I'll show you the platinum chart on the weekly chart, where you can see here we have essentially capitulated. If it proves to be the low here on platinum, we've got some great risk to reward potential for long positions at this zone. So we continue to watch platinum very closely. If we go over to gold, and gold in particular on the weekly chart, I'll just switch over to silver as well. You can see both of these charts where we're poised at the moment as we go into next week have formed rejection candles on the weekly. So essentially with gold here, it looks like we formed a double low so far, which resides at 1,237 US dollars per ounce. Gold is not out of the woods yet. It does need to break back above last week's highs and essentially clear back above 1,260 US dollars, close above that level in order to get more momentum to the upside. But certainly it held up on Friday's non-farm payrolls. If we have a look at gold here on the daily chart too, it has consolidated around 1,255 to 54 US dollars per ounce. Relatively muted move here on Friday with gold. It hasn't broken back down towards the swing lows, but at the same time gold did not break above the highs here either. Really what we want to see here, if gold is going to provide more upside going into next week would be a break back above the weekly highs and then moving back towards 1,270 US dollars per ounce would be the first level that we would look at as a major target, and then beyond that we would look for a revisit back towards 1,285 to 1,290 US dollars per ounce if we were to get additional momentum and follow through. On the flip side of that, if gold cannot maintain this price structure into next week and it breaks back below Thursday's lows here, we could certainly revisit the swing lows of 1,237. The next major level of support below that resides at 1,228, and if we were to see a washout here for gold prices, the next major level of support of course resides at 1,200 US dollars per ounce. So as we go into next week, it is a bit of a decision point here. They held up after Friday's non-farm payrolls. If we have a look at the dollar index here as well, we have a sell signal on the dollar. The dollar has been rolling over the last few days. No support really from non-farm payrolls. It's now broken down to 3-week lows, and you can see here where the dollar is starting to pick up momentum to the downside. And on a weekly chart as well, we've broken below last week's lows. We have a sell signal also on the weekly chart too for the dollar. So if the dollar continues to pick up momentum to the downside next week, that is what would likely give more support to the metals here as well. I would also have Palladium here on your radar too, consolidating over the last couple of weeks here with Palladium. It's been building up some pressure into the apex of a pennant price structure here, and we look like we're on the verge of breaking out above the highs here. You can see where we found support right at the lower Keltner channels here, and if we do break above the weekly highs next week, we could see some good follow through, taking the price back towards $960 per ounce, and beyond that the next major level of resistance resides at $1,000 per ounce. So it could be over a 500-point breakout move if we do see confirmation and we break out of this tight range it's been in over the last couple of weeks. Going back to the silver chart, we are finding support again just at 16 US dollars per ounce, which has been a very key level here over the last 2 years. And again, from a cyclical point of view, we tend to see silver bottom over July and December. You can see that very clearly going back to the chart from 2016, bottomed here in June and July of 2016, again in December of 2016, July of 2017, December of 2017, and now the question mark is whether we're going to see a low here again in July of 2018 and potentially form a bottom and provide some great trading opportunities from here. Moving over to oil prices, we've seen oil trade within a relatively tight range over the last week, certainly compared to the previous week after the OPEC announcement, where we saw a significant rally, over an 8% rally to the upside for oil. So this week we've seen more consolidation. On Friday, oil prices were mixed as the Canadian supply outage supported US crude oil prices, whilst an increase in production from OPEC's biggest exporter, Saudi Arabia, pushed down Brent crude oil prices. So if we have a look at the price structure here, you'll note on the daily chart, if we have a look at WTI crude oil, the breakout to the upside over 1% into the close on Friday, whereas Brent crude oil, we've actually got a sell signal on, and that closed over 0.5% to the downside. Certainly the price structure of Brent does look weaker. We've already broken back below the weekly lows, and if we were to see a sell-off on Brent crude oil next week, the next level I would target to the downside would be 75 US dollars per barrel. If it does manage to hold at this zone at the monthly pivot, and we do see Brent crude oil get a bid going into next week, and very simply this is going to turn out to be a bull flag and a continuation pattern, I would then target 80 US dollars per barrel for a breakout. And then above that level, if Brent crude oil continued to break out beyond $80 per barrel, and if it closed above that level, I would then look to target 82 US dollars per barrel if we were to see a breakout to the upside. The flip side of that, of course, is a revisit back towards 75 US dollars per barrel. In summary, again, as we go into next week, commodity prices where they're poised at the moment, it could be a really great time to get exposure to some of these seasonal plays, and also from a very oversold level and buying in at major accumulation zones, we see some fantastic opportunities with commodities right now. Now, of course, if you would like to find out more and be part of a community of successful traders, then do join us on our live trading rooms. As a member, you get access to the following. You get live trade alerts delivered via WhatsApp, email, and also SMS. You have access to mentorship, expert advice, in-depth market analysis, trusted insights so that you can know earlier to act quicker and maximize on trade opportunities. For more information and details on how to join the service, please go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And of course, make sure you subscribe to our YouTube channel so you are kept updated with the latest commodity reports.